we don't record these daily sessions. Maybe that's something that we can go back and look at, but it takes up a lot of space. Maybe I have to get with Kim, but we'll go ahead and record this, and I'll post this a little later.
Thank you so much.
All right, no problem. Okay, so back to this dollar. The dollar hit consequent encroachment, then it pushed down, broke that swing structure on the 4 hour. We call that MSS, market structure shift, change of character, chalk. Now I expect price to go pull back up at some point. We might break this low too, but eventually price is going to pull back up, at which point you can enter this dollar index sell if you're on Trade Locker. I know a lot of those brokers have dollar index, but I don't know how far it's going to push, but there's an imbalance for this leg up, right? We get a leg up, we break structure, right? So there's an imbalance here. So you're going to get reaction from this imbalance. And then if we keep going down, this will be the next imbalance. And if it pushes down, then it'll break this low. So as you trade these structures, the market structure here, you have to kind of go and look to see where you're going to get your reaction from, right? When this market came down to this imbalance here, right? The first time, it rejects in that imbalance. Comes down again, it rejects. Now it comes down and fills most of it. Then this candle keeps going, and then this third candle, we're finally starting to push through this little order block. So the reason why it does that is because you have imbalances and order blocks. There's big time orders that push this market up in these areas. So when you see those areas with these momentum candles, right? And most of the time you're going to see a momentum candle and you're going to break a high. You know that area is an area that the market is going to come back to and react from. So as this trade pushes down, you're going to get rejections and reactions from these specific areas. Everybody understand that? Okay, so I don't want to be any different with this US dollar than any other pair, you dig? So this is a 3-month candle. I filled that candle. I had my zone. We went up. We touched this imbalance. We took out this high. I expect a nice smooth sell down into the doldrums down here, right? If I go down into the 4-hour chart and look in my zone, oh, wow, look at that. Whoa. It's a lot of so a big bet that the market is coming back to 103, maybe even a little bit further down, in this area or this area, right? So the chart suggests that the dollar's going to drop pretty significantly. All right, that's just the technicalities. So if you trade like I trade, like I know, the dollar's going to drop. And on the flip side, as the dollar's dropping, you'll get some much needed upside relief on trades like EU, on trades like AU, on trades like GU, right? GU is in a beautiful position. This push up broke this high. There's your pullback. That was your chalk. You could have gotten in here if you kind of realized what was going on. A lot of us traders, especially y'all who trade those smaller time frames, you're just kind of sleepwalking because you don't really understand the bigger picture or understand what's going on in the bigger picture. But we had discussed this trade in the call too, that once we took out these lows, that I expect the price to start buying up. The zone is already marked. So if one of you savvy jokers got in this trade, you know, and you just got in the whole, you know, even if you just did it in your demo account just to see where you could take this trade, it's about 775 pips to the imbalance, you know, at the top of this move, right? There's one at the 78, which I believe that the trade will likely hit, you know, maybe we'll keep going higher, but these are areas that are very clean, and they're in the target area. They're in our target zones. So big picture, right? Even if you're not holding these trades forever, big picture, you have the price action telling you that we're reversing, right, on the dollar. And then you look at these individual pairs versus the dollar. And on your charts, you have the technical indicators that price is reversing, because price hit this level and gave you a change of character. And now we're starting to push up. And if you believe that, then there's a lot of money for you at the end of the rainbow. You dig? Okay. If I go to the daily chart, you got two rejection candles. You know, I say this is an order block. You know, I don't know what your pappy or your mama will tell you, but this is an order block for me. I expect for price to pull back a bit and continue to push. Just like anything else, guys, this is not going to be a peanut butter ride. Well, it's not the smooth peanut butter, at least. You have an imbalance here. It's going to get a reaction, bro. You got to expect that the market is going to go up there and it's going to react. So for you crazy folks who are just like stacking up like 35 positions, and you're stacking positions in here, even though you're in an imbalance and you know that the market is going to reject, this is going to blow your account. So if you add your positions down here, right, and you let the trade get to this point, this might be a good profit taking point, because you know that this trade is going to reject around the consequent encroachment at least. So you might be able to hold your first trade for 211 pips. And then the pair might pull back. Without seeing the candle structure going that we have on the buys, we don't know where the likelihood of it pulling back is. But all of these trades, right, all of these dollar trades are going to give you similar looks, right? They're going to give you areas that you're going to get rejection from. This is 122 pips to consequent encroachment. So whenever you take these trades and whenever you're making your decisions as a trader, these are the types of things that you should take into consideration. You know, don't just jump in the NZD trade without understanding that, hey man, I might get a major rejection, 122 pips up. So I need to be ready to take my profit. I might get a major rejection, when it first enters this imbalance. But if you know, and if you understand, hey man, I'm getting this rejection because I'm at the imbalance, now you're setting your TP at the consequent encroachment or a little bit before, if you're not, if you're scared or if you're more of a cautious trader, all that stuff is cool. As long as you have a plan as a trader, then you don't get tripped up, in these market streets. Whenever you go into a trade and you're just assuming that you're going to have a smooth ride from point A to point B, many times we overstay our welcome and the trade rolls back on us, right? And because we're frustrated, we don't read the actual chart. All right, my favorite trade, my favorito trade. Okay, so yesterday I know I talked to a couple of people, and I said, hey man, we have this bearish order block. So this gives us a chance for a second entry, right? Most of us got in on this trade right out the gate this week, right? On Sunday, it gave us this order block. Most of us got in either here or here, and we took this trade down, which is great, which is grados, all right? So you flipped your account. It took you a day, and you flipped your account. Then the trade started pulling back. Now, here's the interesting thing. If you look at this setup, and you had did your analysis on this daily bearish order block, you fib the candle, the direction the market is going. You mark your zone, you mark your 78, you delete your fib. If I drop down to the 4-hour chart, there's my zone. If I drop down to the 1 hour, all right, on the 1 hour chart, I don't really have an imbalance. I have an order block, a 1 hour order block. I also have this level of liquidity, right? This Asian session liquidity. And then I have this other order block. So if I'm just a betting person, I would say, hey man, price could come and it could reject right here first, right? Then it could come and run these relative equal highs, maybe even run this high. So me personally, I sold on Sunday, and price bought back up. So you could have sold on Sunday, bought this back up, and then took your profit and just wait. You gotta wait, because what we don't know is, on Asian session, it might just take off selling, and then getting close to New York, it could buy back up and take that liquidity, and then give you an entry for the sale on New York session. But I want to talk about this buy up, because we had this daily bearish order block, and we had our area that we would have liked to enter. So more and more, I'm seeing these smart money traps. So what happens is right out the gate, you get this toilet flush. And, I know, because y'all like making all that money, you know what I'm saying? Because y'all are big ballers. Everybody just jumps in that trade. Even if they weren't in when they should have gotten in, they just jump in here. And, everybody's in the chat, everybody's drinking it up, living it up. Then you get that liquidity grab. And because you're drunk off the success of this candle, you don't see this as a liquidity grab. But it is, and price is just going, like if you look at this daily candle now, once you get this liquidity grab, all price was doing was going to close the gap on that daily candle, because we never bought up to our area. We never bought up to our zone. We just gapped out. Like the market opened here, right? This was the close of the day. Then the market opens right here. It buys up a bit. And this happened in pre-market when we couldn't even trade. And the next thing you know, the bottom just fell out. So if you go to the 1 hour chart, you're going to see the 1700 candle. We couldn't trade the 1700 candle. When we could trade was 1800. This is when the spreads went down. So that up move happened before we could trade. When we came out of the trade, I was already in the trade from here. So it didn't really affect me. This gave me a bonus, but then the market just falls. And at the end of Asian session, you get this fall, right? And this is what I always try to get people to understand too, is if you're trading New York, you always want to see one side of the Asian session get ran, right? If your bias is for EUR NZD to sell. What you really wanted to see was a push down, and you wanted to see this buy up, and then you want to see 2 candles on the top side of this liquidity, and then the market fall down. Similar to what happened here, except for notice we didn't take out the high. When we didn't take out this high, I already knew that we're going to come back for this high. Because what normally happens is you get a push down, and then at the end of Asian session, you'll get a creep up, and the next thing you know, you're going to get a wick up here to take out the Asian session high, and the market is going to go the direction. Since it didn't do that, like when you don't get a takeout of that Asian session, you already know that the market is going to come back later to get the liquidity, because that's what the Asian sessions are there for. They're there to provide liquidity for the market. So do y'all see when this happened last night? You probably didn't see it if you don't trade London session, but this is 2 a.m. Then 3 a.m. gives you that toilet flush. There's the liquidity grab, and then the market is off for the races. So there's a possibility if you were selling EN or EA that you went to sleep in profit, and then you woke up and your account was smoking.
That was me.
That's that
was my
swing.
EA.
That's that Judas swing. It happens. But if you were in EA, did you get an EA Sunday?
Yeah, I got it in Sunday. Yeah.
So you added more positions?
No. It's a limited account.
Okay, so let me look at this EA, because I think EA is the exact same. This is Monday. This is Sunday. Okay, this was the Sunday candle. So where did you get in EA on this pullback?
Yeah, I got in about 1 o'clock. Well, Monday morning, like 1. So right around there somewhere. Yeah.
Okay, so your account shouldn't. I mean, it's just a pullback.
Yeah, it ain't bad.
Okay, so that's the benefit of getting in when you're supposed to. But many people, because EA did the same thing, you got this run, and then at 5 o'clock? 5 o'clock, you got this pullback, and then you get a flush. So a lot of people likely got in during this flush, because this thing added a lot of pips. 31 pips, but it really came from way up there. So a lot of people probably saw that and hopped in the trade, and then they got smoked, today. But this is not a big deal, because if you notice this price, see where this wick came to fill this imbalance right here. If you do your analysis on this 4-hour candle, you drop down to the 15-minute. There is only a zone. Well, that zone is tapped. There is no other zone. So the only thing that can happen in this particular case is, you see how we have a bullish 15-minute order block. What could happen is pricing come up in here and they can wick the high of this session, right? If it wicks the high of this session, I would probably expect it to go and fill this itty bitty piece right here, this imbalance right here. Y'all see it? So if it's me and I'm trading EA, and I prefer EN better than EA. But if I'm trading EA, I really want to see price take out this high before I get in for the sell. And if it doesn't, if price doesn't take out that high and it just gives you a 4-hour bearish order block, then I'm definitely going to analyze that 4-hour bearish order block and find the imbalance to that bearish order block before I get into that trade. Because at that point, that 4-hour bearish order block will be my only protection against price rolling back on me. So ideally, you want to see price come up here to take out this high, right? Maybe run into that imbalance, but at least take out that high, and that will be your protection. Then you can sell the trade from up here, and it gives you a lot more protection against any pullback. Does that make sense? Am I talking too advanced for people?
It makes sense.
Can you go to the 1 hour?
The 1 hour. Uh-huh.
Okay, I just wanted to see what you had because my alarm never went off, so I didn't even look at it.
Well, but didn't you take an EN trade?
Yeah, I took it in.
Did
With
you
my account.
did you get your 100 pips?
I sure did.
Okay, so hopefully what I hear you saying is you're done for next week. No, see, you see what I'm saying? Hey,
I'm just commenting on the trade.
well, no,
I'm
but
just
I
commenting
get
on
you.
the trade. That's it.
Kai, I get it, but so this is like the age-old issue with men and women. If you got your money, right? If you flipped your account, all right, same. What would you tell your boyfriend if he had this girl at home? He don't need to be out looking for no other women, right?
This is for educational
I'm
purposes
not.
only.
This is very much education.
Can you zoom in and go to the 4 hour?
Yeah, the education here though is self-control. If you can flip your account successfully 10 times, well, I think it's 14 times, you're almost a millionaire. One more flip and you're a millionaire. I know 100 to 200 sucks. Nobody, it's not gonna pay a bill or none of that. But you can't get to 1,000 without hitting 200 first. Now, Kai, with that being said,
I feel attacked. All I did was comment on the trade.
listen, but hold on, man. You're taking my speech out of context. You are, because if you're going to be greedy, right? If you're going to be overly aggressive, then I would do one trade on Sunday, Monday, right? Or Sunday, Monday before Tuesday, and I would do another trade after Tuesday. Do you understand why? And many people won't understand it. But do you understand why?
Well, I got my pips, so I'm not doing it anyway. I know I've been greedy before. I know.
Okay, but I'm still asking, like, do you understand why I would do one in that time period and one after?
No, I don't. Why?
Because of the power of 3. Chances are, if you're bullish or if you're bearish on this EUR AUD trade, the market is going to move one direction. And in this case, it moved down and up on your Sunday through Tuesday. And then the rest of the week, right, until Friday, is going to give you your real move. That makes sense?
Oh, yeah, okay, yeah.
So you might catch that fake move, and it might pay you very well. We can look at GJ as an example last week. Last week, when the market opens, if you take this trade, you're getting paid. And then on Tuesday, right, this trade right here happened on Sunday. You see Sunday at 1,700, the market goes up 260 pips. Then on Tuesday, if you get in this trade on the London session, you catch 600 pips. So what I'm saying is, if you're taking 2 trades, if you're a veteran or if you understand how the market is moving, there are ways that you can take advantage of it. But you know, for the novice, for the people who are just getting on the ship, I would strongly suggest just get your 100 pips and go on to the next week, because this is nasty work. I've been there. I've traded. I've made my 100 pips, and then the second half of the week I blew my account. You know what I'm saying? Like the market gets nasty, and a lot of times because we're on a lower time frame, you know, we don't see it until it's too late. So
I'm curious to know if people set targets. Like, is it just an open end TP, or like are you setting TPs, or
it's open-ended. It's
I mean,
open.
because we know price is never going to go, and I know you're the swing trader, so that it's a little different.
It's
But price
not.
is
It's
never
not
is price.
different. Go ahead, Kim.
Well,
It's not
I'm
different.
just saying, but if we know that price is going to go sweep some kind of liquidity, some kind of wick, some kind of, so why not take your TP to the wick or set your TP to the wick? Because you already know once it either breaks below or sweeps that it's going to pull back. So for those who psychology can't take the pullbacks, or like I don't I'm if it's open ended, then I mean you're gonna get what you get. But if you just set a TP to build the equity in your account and then wait for the next move. But that's why I was saying, you know, as a swing trader, it's a little different. You're a little different. But based on this trade right here that Ty talked about, when he said price was going to, like, once it broke here, once it breaks structure, we know it's going to pull back. If it doesn't pull back from here, then it is likely going to pull back from here or here. So why not, if you got in up here, why not take your profit here? Because now at this point it swept this low, and now it's going to pull back and then sell down again. So I'm just curious why people don't set TPs. That's all I'm saying. That's all.
So Kim, I hear what you're saying. I think it's solid, right? And I do like to set TPs. But to answer your question, if you struggle with entries, sometimes you fear that you're going to lose that great entry from the top and possibly not be able to re-enter. So that's just one possible scenario for why somebody wouldn't want
See,
to, close out.
that is sick right there, what you just said.
I know it's not a good answer, but it's a real answer.
Well, yeah, I know I just man, that's crazy. Like,
Because now the price break below here?
well, it hit this imbalance. I have this marked up like this
Oh
because
yeah.
because
Oh yeah.
it's the imbalance. And
Oh.
to me, it's the imbalance that broke structure, right? So price came here, gave you an order block, this imbalance, we broke structure. I know the market is coming back here. You know what I'm saying? So on the way down, I said, okay, I know that this imbalance is going to be reacted from. Now, listen, I'm not going to say I knew that price was going to buy all the way back up there, but I did have an understanding whenever we just took off after the trade. Like, I wish I could see the candle from yesterday. It was just a daily order block, and then it was a gap. So see that gap right there on that 4 hour? Y'all see this gap?
What gap?
Yes.
What you got?
This right here, this gap in
okay.
price. So after the break, we just pushed down right there to the consequent encroachment of that imbalance. It left a gap. So I had a pretty good idea that we were coming back to the gap. I didn't know that we was going to do it like this though.
That's the order block, not the fair value gap.
No, the gap in price. You see, there's a
the gap. Okay,
yeah,
I got
the
you.
candles don't match. They don't.
I see what you're saying there.
So this is a telltale sign that is coming back. I didn't know it's coming back right now. You know, like I didn't know it was gonna be like, bam, we're back, you know. But it just goes to show you that as long as you're tracking the things on your chart, you have a good idea where your reversals or your changes can happen. And if you're a person who's just adding positions and you're not understanding why you're adding them, you just adding them because it makes your account beef up. You should pay attention to like when you break lows, when you tap into your imbalances, and what price is doing at those levels. This push down and pullback, well, it likely happened when everybody is asleep, but this can really this can fire you up, man. This could give you this could make you trigger shy the next time. But if you mark your chart up ahead of time and you understand where your imbalances are, where your reverse points are, then it makes sense. And then if you think about this, everybody knows, or most of us who have been in this group a while, we know when the Judas swing happens on Tuesday, and I'm not just making it up, Sade, it's really a term. The Judas swing happens, generally speaking, according to ICT, it happens on a Tuesday during London session. You normally get your change of direction.
Can you explain a Judas swing? Because I have no idea what that is.
Okay.
I literally have no idea what that means. It just sounds. I've looked it up too. It still didn't make sense to me.
Hold on. This is why.
Judas swings for 5 years. I know you know what that means.
I do not, because I don't one, listen to ICT. Two, I'm trading market structure. And if a Judas swing happens in there, it's probably because of market structure.
Well, it's always going to be because of market structure.
But I'm saying, that's what I'm saying. Like the
So I'm explaining it.
definition. No.
So listen, the ICT.
I just said a break of structure and a pullback.
And look, this is the ICT Judas swing.
Too. I'm done. I'm done.
Shut up,
Sean.
He said it often sets the London session highs or lows, right? It's typically an energetic price link that could either be a run on stops or a return to a key price level. In this case, it was both, right? It set the London session low, but it was a return to that price level. So if you look at this example they have on USD CAD, I want to call your attention over here, because this is where the imbalance was and price pushed all the way up here. But price Judas swung, this Judas swing happened on London session.
So it pulled back to
that imbalance and it reversed at that imbalance.
78. That's pretty much, he just making it difficult.
Well, but the actual turn, this actual turn happened on London session. So, like this might not mean anything to people who don't trade London session all the time. But if you're a London session trader,
I need it simple. And I needed that it pulled back to an institutional candle and then he just makes it difficult, just make it too difficult for people.
This Judas swing happened at this imbalance. But it's still Tuesday night, like it's been so long since I was in a trade that did it, that it's nice to understand what's going on. You know what I'm saying?
Go ahead. I'm listening.
So for the people who are new, this is exactly what that was last night. And if you were in this trade, and many of you shouldn't have been in the trade because you already made your money from the top to the bottom. But if you were in the trade and you got hit with the Judas swing, it's unpleasant. It'll make you mad. Well, you can look for it on Tuesday nights. I'm not saying it won't happen on a Wednesday, Sade, but so if you think about the power of 3, do you know what the power of 3 is? Does everybody know what the power of 3 is? I mean, since this is Tide Day, I can
Kim should explain the power of three because she failed out on that Judas swing
I
question.
don't know what that means either. I don't
Well,
even,
hey,
I don't
Sade, do you know what the power
I
of
didn't
three
look
is?
at the power of three.
Yeah, I'm
Is
disappointed.
it like three moves, three sort of sub moves in one move?
Okay. No, you see this? You see this right here? This is where the market starts. It gives you a move up. That's the first power. It gives you the move. And then it gives you the pullback. Okay.
Show real candle
Okay.
now.
So listen, we call this is just like a regular candle, right? If you were bearish, right? If you thought price was going to sell today, then what you would want to see is you want to see the candle open up and you want to see price go up first. You tracking? Then you want to see the price fall to create
Sure on a real candle.
the body of that bearish candle. Okay? Then at the end of that bearish candle, you want to see price pull back. So what this looks like is this is the top wick of the candle. This is the actual red body of the candle, and this is the bottom wick of the candle. Does that make sense? Since you got quiet, Shadi, I'm gonna assume that didn't make no sense.
Well, that's why
Oh,
I've been
sorry, I
begging.
thought I was unmuted. Yeah, it makes sense.
Okay, so if you look at this red candle, all right, price, it gapped down. So price opened up right here at the bottom. Then it went up first. So this is what happened, the power of three. Price went up first.
Mhm.
Then it came down. Then price brought up. There's your power of three. Yeah. 1, 2, 3.
So is the first and last part the wicks, and then the middle part is the body movement.
Yes. But here's where it gets real interesting. This is a 4-hour candle.
Mhm.
The candle that I like, the ICT was talking about, or that I talk about a lot of times, is the weekly candle. On the weekly candle, the first part of this candle generally happens Sunday, Monday, into Tuesday.
Right.
And
Okay.
then Wednesday, Thursday, you get the move. And then Wednesday, Thursday, Friday, and then the second half of Friday, you get the pullback.
Okay.
And it doesn't have to happen on those days all the time, but the majority of those moves you're going to find that happen on those days.
Mhm.
That makes sense?
Yeah. No, it makes sense.
Okay.
Thank you.
No problem. If you're trading this style, it really helps you if you start paying attention to when these things happen, right? You're going to see, hey man, like that move happened on London session at 1 a.m. Hey, Ada, why the face, bro? It's too much information.
Yeah.
So listen, the purpose of these meetings is for you to take notes, and you don't have to take notes of every detail that I give, or when Andrew is on, when he gives, or Kim. But the importance of the closeout meeting is to kind of follow the market, and you take notes in what's going on. Over time, we're going to say the same things. I'm always going to point out the same things when I get on the call. What I'm looking for, which imbalance is important, where's the break of structure, where's the order block. Over time, you're going to start understanding what I'm looking for. Even if you don't trade like me, even if you trade like Kim, you're going to understand what I'm looking for when I trade. And it just happens over time. There's no substitute, guys, for time, right? It takes us time when we look at the chart to kind of pick out the key areas. What's important? Like, why the heck does Todd put these boxes on the chart? It's because they're imbalances, or they're areas that are important on my chart. And you're going to notice that every time I get on, my charts will look the same way, right? It's important to me when price crosses over these moving averages. You're going to understand that sort of thing. So I'm not saying that it's going to happen on day one, but Aiden, you're 18 years old.
Yeah.
And I get it, man. You came over here, you watched my brother's cars. Here in 5 years, you'll be the dude in the neighborhood, with all the cars. You know what I'm saying? So
Yeah.
we didn't learn this stuff at your age. And I get it. It can be a little confusing, and a lot of information. Like, this is not structured like a class that you're probably used to at Las Cruces High School or whatever the case may be. But the point is, as you watch your videos, whatever videos that you like watching about trading, and you start looking at your charts, the areas that we point out are going to start making sense. And I'll give you an example. You see how this price came down and we touched the imbalance over here? We had an imbalance right here. We had an imbalance right here. You see that?
Yeah.
You know what an imbalance is?
Yeah.
Okay. So did you notice these two big candles that went up? Did you notice this big imbalance from here to here?
Uh-huh.
Did you notice this big imbalance from here to here?
Yeah.
And then this price tapped into that imbalance and it's rejecting. You see that?
Mm-hmm. Mm-hmm.
And so there's a good chance that price is going to run. It's going to push up there and run the Asian high like we talked about. You see that?
Yeah.
So at some point, when you start seeing the charts, you're going to have kind of expectations or things that you want to see happen on the chart. And it could be the difference between you taking a sell on EUR NZD because it did everything you wanted it to do, or maybe you say I don't like EUR NZD because it didn't do what I wanted it to do. I like EUR AUD because it did everything, right? EUR AUD came up here, it gave equal highs, and then it ran this wick ran those highs, and I don't think that wick really did, but I'm just giving you an example of what you might want to see, right? So let's just say this next wicks past these highs. So maybe you're more comfortable taking this trade because it checked off more of your boxes than the other trade, even though they were very similar in setup.
Mm-hmm.
So just, I get it. It's a lot of information. It can be kind of intimidating at first, but when you don't get it, hey, stop somebody. Say, hey, I don't understand that. So we can go over it because you're not the only one that doesn't understand it. It's a bunch of adults in here. I know you're an adult, but it's a bunch of older adults in here that are struggling too. They're just not saying that.
Right.
They're suffering in silence. All right. Does anybody have any questions over that? Over all three of those setups, EA, EN, and UJ. Bueller? Anyone? All right. Let's
Can
talk.
you
What'd you
tell me
say
when
about
you
UJ?
Oh, go ahead. Sorry.
Huh? Somebody? TT?
I said, what did you say about UJ? I think I missed that part.
Hey, TT. I said, Mike. So, okay, just a very quick recap of UJ. This area, and there's a 4-hour bearish order block on UJ that was done last Friday during the NFP. There's an imbalance in there. If you drop down to the 15 minute,
What's the difference between an order block and imbalance?
okay, let me finish explaining this to TT. I'll tell you the difference. So in this NFP bearish order block, right? When this bearish order block was created, there's an imbalance. If you drop down to the 15-minute, there's an imbalance right here. This imbalance needs to be filled. And then I'll look for the sell. When the market opened, we created this bearish order block that had an imbalance. We filled that imbalance, right? And we pushed down, and then price reversed because it's going to this imbalance. Does that make sense?
Yep, already.
Okay, the difference between an order block and an imbalance, right? A order block is you know, when you speak of order blocks, it's two candles. This candle going up, and then the engulfing candle that happens after that candle. This is an institutional candle, which means this suggests that institutions push the market up first, right? We pushed the market up first. We ran these highs. Then immediately we push the market back down to run this low. So you have big orders in these two candles. The imbalance, right, that's inside this order block is used to control the move, right? This is a bearish order block. So you need to find the imbalance on this push down that's controlling this move. The orders in this area, you got so many orders in this area, when the move comes up to hit it, these orders should overpower this market right here, right? The market comes up and hits this area. These orders that are in that area that have not been mitigated should push the market back down. So your order block is an accumulation of institutional orders, right? It shows you where the institutional players are. The imbalance that's inside that order block is going to control your move. So it's either going to be a bearish move or a bullish move. So that's the best way I can explain the difference between an order block and an imbalance. Hey, Milo,
Michael, do you know what a fair value gap is?
it's an imbalance.
No, I'm asking Michael.
No.
Okay. So
Yeah.
it's the gap. It's the gap. So that where Todd's cursor is there's an order block right there, the green candle and then the red candle, right? And versus price coming back to tap into that order block, it left a gap, a fair value gap or an imbalance for price that we're expecting price to pull back into. So price has not pulled back into that gap as of yet. So we should, now that price has broken structure, right, to the downside, you should be expecting price to pull back into this gap or into this order block for the continuation of a sell.
Okay, I got you. That makes sense.
Michael sound like Will, man.
I appreciate it.
Welcome.
So what y'all have to do as traders is you have to be stingy with your money. If price does not come back to here, then you have to be the type of person to say, I'm not getting in the trade. I'm not taking the trade unless price hits my area. And if you do that, your account is going to last a lot longer. All right, any questions?
Yeah, I agree with that, Todd. So I pretty much missed on everything. I was holding UJ, and I pretty much just closed with a break even, but I felt like I had missed E and everything, so I just was trying to hold still till
Yeah, and it pulled right back. And so now you're about to catch all of it.
preferably.
You'll have, well, I mean, you'll have your pick because UJ is going to come here. And EN and GN are pretty much back at entry. I mean, I said GN. EN and EA are pretty much back at entry. So you'll have an opportunity to trade those either tonight or tomorrow. And we just have to be patient. We talked about GU. GU is a good look. We didn't talk about UCAD. UCAD is a good sell. UCHEF. All those look like they're they're good looks. But I wanted to talk about GJ because to me, GJ is a good setup too, for at least 200 pips. GJ had that monster run last week. It pushed up and then it fell like, I don't know, 600 pips or something like that. Something ridiculous. Maybe it was 500 pips. I don't know. Whew. 700 pips, 800 pips. Okay, it fell 500, but this week it dropped a little bit more. Okay, so basically over the last week, GJ had an 800 pip drop. Did y'all catch the 800 pip drop? Even Lil Kim has to say it broke this structure right here, Lil Kim. Even Lil Kim has to admit that broke that structure. Now, if you fib from the top, no, not that line, Kim. Look down here. If you fib from the top to this bottom, the top to the bottom, let me move this down. Because this is my zona amarillo. Mi zona amarillo y mi 58. Okay, there's my 78. There's my golden zone. You already see the price is pushing out. I would expect we can get a pullback and then a run up into this zone. There's 182 pips. If it goes to the 78, good Lord, we're getting paid. It's a lot of payment that's available. I would expect price to get a reaction once we break these highs. So don't just think you're collecting 300 pips like, very cleanly without any hassle. But if it just goes up to take this high out, that's 187. That's 187. You kidding? Oh my God. My favorite, they'll have a zero line. That's wasted space, man.
It just makes me question whether you fibbed the whole move.
I don't want to keep track of zeros, man. So look, if you just start right here, like you can see my cursor. I'm starting right here at the top to the bottom, from top to bottom. Oh wow! What's up, Raya? What's up, Raya? Raya, you ain't gonna say nothing. Oh, I didn't see you, girl. You can't talk. I ain't heard from you in years. Hey, Mariah, let me hear you. Let me hear you because I gotta ask you a question. You don't know how to hit the unmute. Are you on your phone or you on your laptop? Hey, Sade. That's about a 200 pip move, guys. That's a lot of potential there.
It's definitely going up there before we get a pullback.
Yeah, but I'm just looking at the way it's pulling back now. But even from where it is right now to there, it's 200, right around 200 pips. Hey, Y'all know that story I was telling y'all about how I went to church in New York and that pastor did that privacy. Y'all remember that?
The pastor cast the demons out of you.
It,
Yeah.
it had nothing to do with the Davis.
I got it. I fixed it. I got it to work.
What's up, girl?
What's
It is very good to see you here, man.
I know. Listen, this strategy that you're teaching is what I was telling you that I do. I just think that maybe when I was saying supply and demand and smart money using like the race valley, the base rally drop and all of that smart money concept, market structure, I was talking about that. But now I see like you do it as like I know it's like similar but not the same with the order blocks and the supply and demand. But this is the way that I've been trading for like the past year, like learning how to trade is smart money concept.
Who
So
was
this is
teaching
like
you? Who was teaching you how to
I
trade?
literally my friend put me on the trading and then I was like watching crazy amount of YouTubes. I was in Discord and then I found the strategy that worked for me because like I had to go through a lot of trial and error. And when it came to smart money concept, I caught on to it more and it was better for me to understand like liquidity sweeps and stuff like that. And then that's why I gravitated towards it.
Hey, Sean. Hey, Mariah, do you remember Sean?
That's how I remember showing.
Hey,
What's up?
Sean.
Hey, what's up, Mariah?
Sean, you remember Mariah?
I remember her and her sister. I don't remember what she looked like. I don't remember who was who.
Yeah, hey Sean.
Aaliyah.
Hey, what's up? Yeah, I remember Aaliyah and Mariah, but I don't remember who was the oldest and
Wait till I tell Aaliyah. I'm on Zoom with y'all. She gonna be going crazy.
Yeah, you should tell her to join too. But yeah, Mariah is the older one, Sean.
Oh, okay. Well, hey, Mariah, how old are you now?
I'm 33 years old.
Mariah is 33. God, that's crazy.
You was like what, 14 or
14?
15?
She was 14.
Yeah, I was 14.
Mariah used to hate me. Huh?
No, we love you. We talk about you all the time.
Well, I know, but I mean, but back in those days, you used to be all man. You
No,
used to be,
but yeah, because you're just you're an army brat. But we talk
hey,
about you all the time.
oh, Mariah, remember I used to be like, wake up, it's Daddy Daughter Saturday, get your laundry. Y'all would be so, oh my God, man. Oh, that's hilarious. But I'm very glad that you getting your trades on, man. And we're gonna get you tightened up. But hey, do you remember going to church that day, Mariah? Do you remember that? When y'all were hungry?
You must
I'm
got
just
it.
having a difficult time with the phone, but yes, that's what I'm talking about. We be talking about it. Me and Aaliyah be laughing to this day. We talk about the Mary J. Blige when we used to have to practice that song.
Oh man.
I,
Oh my God.
I,
Oh my God. Yeah, those are good times. But yeah, we'll catch up, Mariah.
yeah, definitely.
That is hilarious. Um, but does anybody have any questions over any of these trade ideas? I think they're all pretty solid, man. Everybody should be able to catch 100 pips. Everybody, like there should be a trade that everybody likes this week. Is anybody lost?
I mean, quick recap. Our primary options are UJ. Did you say EN and EA? Those are the three.
Yes. Now listen, the way that the charts are set up right now, I like GJ better than UJ. They're all still valid trades, but UJ needs to get to the area that it needs to sell from, which is not quite there. This trade is already buying up. It's in progress.
Can you go to the 1 hour for it really quick
All right, let me move
on
this.
GJ?
Okay.
I'm gonna post it in the chat anyway, but now that price has now that price has
Push that.
broken this high
Mi-
is breaking this high, I'm expecting it to pull back somewhere up in here somewhere. And then give a pullback
To this imbalance. Yeah.
to here to then continue buying up.
Right. Which the buy-up will probably, this is just me guessing, guys.
At least up to this high. Take y'all money. Take
Exactly.
y'all money.
The buy will probably happen on London session, like 1 a.m., 2 a.m. New York time.
Mm-hmm. Yeah, that's what I'm expecting. Now that prices, because market closed, I got an alert that price closed above here. So, so now that is structure, guys. And if you want to trade from the imbalance or you want to trade from I usually trade from the institutional candle or the demand zone in a bullish market and take it to the next high. Just take it to the highs. There's liquidity here, so we know it's going to go and at least grab the liquidity before
Pulling back.
And then I think there will be one more push,
Yeah,
possibly.
it's going to
Definitely be one more push. Yeah. Mm-hmm.
Okay, any questions?
Asking all the questions.
So everybody good? Everybody good? All right, good people. I'll see y'all in the market streets.
Thank you.
Doodles.
Thank you.
Thanks, Todd.
Thank you.
Thank you.